Luxury home builders Toll Brothers trading up around 2.5% at the moment after reporting a mixed bag of results as rising mortgage rates slowed down buyer demand. The company posted weaker quarterly orders but set their guidance on deliveries for next year. Let's bring in Yahoo Finance's Danny Romero with more on the state of housing. Hey, Danny.
Rochelle, forget about rising mortgage rates. Toll Brothers said in their fourth quarter earnings that demand was strong in October. Remember, mortgage rates were hovering around that 8%. They said on the call that they didn't have to increase incentives to drive up sales. And that really does point out and signal that the popular incentive for this home builder has been those mortgage rate buy downs. That's when you upfront the cost to lower down the rate on the loan. Another strategy that has been really successful for this home builder has been the spec homes. That's when you don't necessarily have a buyer in mind. Those homes are selling $200,000 less than the build to order homes. And also another thing on the call that was said is that the spec home strategy has provided a return on equity for them compared to the build to order home. So they're seeing that as a gain. But let's talk about prices. That's all about homes. The prices are up over 12% from last year. However, Toll Brothers does expect that their average closing price will be less than $1 million next year. That's part of their price mix strategy. Overall, what stood out to me for their next year guidance is that they plan to close a midpoint of 1,800 to 10,000 units next year, which is ahead of some of the analysts on Wall Street, their expectations of 1,800 to 9,000 homes. So far, they have signed over 2,000 net contracts with a price tag of less than $1 million. So that could be the direction of where they are headed, going towards that affordable luxury housing.
Danny Romero there with the very latest on Toll Brothers. Thanks so much for that.